Are the problems demonstrating the cash or the sales discount, the two approaches? Let's do the gross method first. And on the gross method, remember, we assume that nobody is expected to take the discount. Thus, on 5-1, when we make a sale and sell Maine lobster for a gross price of $30,000, it's simply debit accounts receivable, credit sales, $30,000 at the gross amount. We then, on May 5th, sell cod for a gross price of $20,000. So on 5-5, it'll be debit accounts receivable, credit sales for $20,000, the gross amount. When the sale of the lobster, the customer pays, notice that the customer is going to pay on May 6th, and notice the terms were 3, 10, and 30. That means that if the customer pays within 10 days of the invoice, in other words, by May 11th, they don't have to pay $30,000. They only need to pay cash of 97%. So on 5-6, we will only receive 97% of $30,000, or $29,100, in payment of that account receivable of $30,000. Now, as you can see, if we don't have some way to handle the 3% discount, we would be sending that customer another bill, and they would be a little perturbed with us because, remember, they paid early to get this cash discount. So we're going to debit a contra revenue account called cash discount or sales discount for the 3%. As far as the sale that happened on May 5th, notice they didn't pay till May 31st, which is more than 10 days after the invoice. So when they pay on May 31st, they're going to have to pay the full bill, or 100% of $20,000 or $20,000, and credit accounts receivable. So as you can see, under the gross method, we record it gross, and then we take the discount when the customer pays. Contrast that with the net method, where we assume everyone is going to take the discount, which means that when we make the sale on 5-1 for the lobster, we're going to debit accounts receivable and credit sales, but we're going to record it initially at 97% because we're assuming that everyone is going to take the discount. So it's going to be for $29,100, even though the sale was for $30,000. On 5-6, again, we will assume that everyone's going to take the discount. So we're going to debit accounts receivable, credit sales for 97%, 3, 10, and 30. And 97% of $20,000 is $19,400. Thus, when the first sale pays on 5-6, because it's within the discount period, it's simply debit cash, $29,100 for the 97%, and credit accounts receivable. But on 5/31, if you pay after the discount period, the customer is still going to have to pay cash for the full amount, $20,000, in payment of an account receivable that's only 97% on the books, or $19,400. So we need a 3% to handle the difference, and that 3% is $600, and it's another revenue account because really what we're getting here is revenue because the customer failed to take the discount. So really it's more of a financing charge than it is the cost of the goods that were purchased. So the account is called cash discount lost. And cash discount lost is a revenue account because we're making $600 revenue. So let's compare and contrast these two in this problem. And so on March 3rd, when we sell goods to AAA at a gross price, if I was doing the gross method, it would be debit accounts receivable, credit sales for $1,400. But if I was using the net approach, it would be debit accounts receivable, credit sales. The terms here are 210 and 30, so it would only be recorded at 98%. And 98% of $1,400 is $1,372. March 8th, when we sell goods to BBB for a gross price of $800, under the gross method, be debit accounts receivable, credit sales, $800. But under the net method, it would be debit accounts receivable, credit sales for 98% of $800, which is $784. $784. On March 11th, if I'm under the gross method, remember, if it's paid within 10 days, which it is, so it's within the discount period, under the gross method, you're only going to receive cash for 98%, which is $1,372. You're going to have a contra revenue account called cash discount for the 2%, and the 2% is $28, and you'll credit accounts receivable for the $1,400. But under the net method, it's simply debit cash for $1,372 because you assumed they were going to take advantage of your fabulous credit terms, and credit accounts receivable. Notice for BBB, it's more than 10 days after. So under the gross method, it's going to be simply debit cash for $800, credit accounts receivable for $800. Under the net method, since we don't receive, or the customer doesn't receive the discount, it's going to be debit cash $800. I'm going to credit accounts receivable for $1,372, which is 98%, and I'm going to have another revenue account called cash discounts lost for $28. And finally, in March 29th, we have a new sale to CCC, and so under the gross method, it would be debit accounts receivable, credit sales for the gross amount, $1,800, whereas under the net method, debit accounts receivable, credit sales for only 98% of $1,800, which is $1,764. So hopefully these examples help you understand the net and the gross method.